Hello guys, this is Zafar from Invesis Capital. Today we are going to talk about being a full-time professional trader. Since last March 2020, we have seen a phenomenal bull run and lot of people have made a lot of money in the market. Now recently, I have received some inquiries whether they should quit their job and consider full-time trading. Even on social media, we keep on getting this type of queries whether is it good to become a full-time professional trader. Now, just to give my background, I have been in market since 2006 and I have been doing professional trading since last 15 years. I have made money from the market and that was my sole income. Apart from that, I had no other source of income. So I have seen the ups and downs in being a full-time professional trader. And today I am going to talk about some of the things that you should consider before taking in plunge as a full-time trader. So when one thinks of becoming a full-time trader, first thing you should ask yourself is why do you want to become a full-time trader? There can be a number of reasons for the same, but two primary reasons that I see. One is you want to quit a job. If that is the sole motivation that you are not happy with the job and you want to try something else, then maybe another job or another business opportunity is what you should look for. Second thing is making more money. So, for making more money, you should ask whether it is really necessary to be full-time trader and sit in front of the screen. Nowadays, because of advances in the technology, there are many options available to any trader to do his job as well as earn from the market. Two things that you can consider is one, there is a end of the day strategy. So in end of the day strategy, you don't need to monitor the market all the time. So you will have your input of prices at the end of the day, and based on that you will take your decision. So you can think whether an EOD strategy will suffice for your needs. Second thing, if the strategy is based on intraday signals, then nowadays there is option of automated trading or algo trading as we say. So you can code your strategy and let it run automatically and just monitor at the end of the day what is the performance of the strategy, and you can still make money. Now, after these considerations, if still one wants to go ahead and become a full-time trader, then the next important thing is how you are going to make your money. There must be some strategy or some ways of buying and selling that you have in mind. Now, that is all thought, whether it is theoretically or valid or not. That check is very important, and we can do that through back testing. So I have seen many traders in my life, met them personally, and one of the most important thing I have observed is that they all have a system. That system may be coded, that system may be written, or it can be a mental system where they have not written any rules but they know what to do in specific situation. So first thing is that you have to design a system with whatever thought process you have of buying and selling in the market, and then you have to get that thought process validated. While doing the back testing of system, there are two three important criteria that one should keep in mind. Market is all cyclical, and these cycles generally last for a long time. Say if the market is in bull run, it can last for 4 5 years. So in those 4 5 years, whoever is buying, he will make money. But after that phase is over, then there might be bear market, or there might be a sideways market, and working with the same strategy in that period will become difficult, or that strategy may not yield desired profit in those particular market. So every system has a specific time when it will be profitable, and there are other times when it will not be profitable. So the period of back testing should consider all these parameters, that the system should be valid in various phases of market. After you have checked the strategy and you are satisfied with the results of the strategy, then the next stage should be doing the live trading or running the system through live checks whether it is producing the same results as shown in the back testing. So you may consider a period of say 6 months or 1 year where you will run the system live in the market and see if it is performing as per your expectations. When it starts to produce the desired results in live market, then at this stage you might think that it is okay to go ahead with the being a full-time trader, provided you have sufficient capital to deploy this system. This validation part is very important. All the traders or all the people who are interested in market, they have various ideas how to make money, but it is not necessary that those ideas will work out in real market. In the past I have seen some of my friends, they wanted to be full-time trader in the market and they had certain ideas that this should yield the desired profit or desired results, and then they worked on the strategies in live market for 2-3 years. After the some time they realized that it is not working and they are not meeting with the desired results, and then again they went back to their job. So it is unnecessary waste of time. If you are going to do live experiments in the market, it is better that you first of all you prove your system and then take the next stage of becoming a full-time trader. So once system produces desired profit level or desired percentage returns, the next important decision point is what is the capital required to run this strategy so that you can live independently on the income generated from market. And this is a little bit complex calculation. Many people make mistake while calculating the capital required, and they make incorrect assumptions or skip important informations or decision points while deciding the capital required. As per me, there are 5 points you have to keep in mind. First of all, when you are becoming a full-time trader, so you are solely dependent on the income generated from market. So actually you are trying to replace your income, whatever you are making earlier from the job or your business. So first point is replacement of income. Second point, when you become a full-time trader, there might be some investment and there might be some expenses required to set up your business and run business on month basis. So you have to consider those expenses. What can come in expenses? It can be if you decide to have a premises of your own for running your trading operations, so it can be cost of that premises. It can be some hardware required, or it can be technology cost, like if you are doing algo trading, then API cost. Third point is taxes. If you are doing derivatives trading, then it is treated as business income. Positive side is that you can deduct all the expenses from your income and arrive at net income for paying taxes. But you have to consider that you will have to pay taxes on your income, so income in hand is going to be reduced accordingly. Fourth point is lifestyle inflation. You know, inflation is a reality. Whatever we are spending today, the amount is going to increase next year because the prices keep on increasing. Second thing, we also want growth in our lifestyle, like maybe a bigger house or a bigger car or some fancy holiday destination. So everyone wants to upgrade their lifestyle. So whatever you earn this year is not going to be sufficient next year. You will have to earn more, and that will comprise of basic inflation plus the upgrade that you want in your lifestyle. So you should plan accordingly that your next year income is higher than current income, whatever figure you are comfortable with. Inflation generally runs at around 5 to 7 or 8%. So you can consider 10% or 15% as lifestyle inflation. And the last important point in deciding capital is what rate of return you should expect. You know, in this kind of bull market, it is very easy to get carried away and expect that you are going to earn 50% or 100% year on year. But that's not reality. If you look at very successful traders or investors globally, then they don't generate this kind of income. Even a 20 or 30% kind of income, generating it very sustainably over a decade or two is a very tough job. So you have to consider that aspect, what kind of return you are expecting over a long term. In my experience, being conservative and expecting a rate of return around 20 to 30% is a good starting point. So, considering all these inputs, you can decide for yourself what is a good capital to start with. These are very subjective and very personal. Everyone will have different point of input or different expectations about their trading or about their rate of return or kind of inflation expectations they have. To summarize capital required for trading, we can consider these 5 points. One is what is the income that you are trying to replace. Second, what are going to your expenses for running your trading business. Third is what kind of effective tax rate you are looking at. Fourth is what kind of lifestyle inflation you are expecting. And fifth, what is the long term rate of return that you are expecting on your capital. You can just take these inputs and put it in a Excel and do a little exercise what kind of capital is required. In my experience, anything less than 5 times of your expected annual income, and it can be little stressful. Market income is not linear. It is very lumpy. Sometimes there will be profit, sometimes there will be losses, and there can be a long period of drawdown. Say for 3 months or 6 months, you are not making any money, but you still have bills to run. So that is going to put pressure on you. So be little conservative on returns and keep the cushion of higher capital so that you are not stressed out during this journey. And last but the most important aspect of trading is trading psychology. Markets and trading is a totally different ball game. It is not comparable to any job or any business that you might be running. A lot of psychology is involved, whether you are a discretionary trader, whether you are a system trader, whether you are executing your trades manually, or whether you are running algos. But as I said, the market returns are not linear, and they can test your patience, they can frustrate you a lot of times. So dealing with all this requires a very firm and sound psychology. Whatever may be your method of trading, there are going to be periods of losses. There are going to be periods where you are not making any money or you are losing money on consistent basis, and whatever you try it is not working. So there will be lot of questions whether you have chosen the right path or not, and for that being psychologically or mentally strong is very very important. Market throws challenges at us every day, and it exposes our psychological issues one by one, and then you have to plug those issues, and for identifying and taking corrective action over those psychological issues takes a lot of time, lot of understanding of self, lot of understanding of systems, and then you have to take the corrective action. So let's summarize. There are 4 or 5 critical decisions you have to take before taking the plunge in full-time trading. First of all, is it really important to be a full-time trader, or if the motivation is money, then you can do it without being a full-time trader, simultaneously working in your job or profession. Second thing, validation of system or validation of thinking process. So whatever be the thought process behind taking trading decisions, make it rule based and get it validated. Third thing, after back testing, check in live market whether the system works as per the expectation. If it is working satisfactorily. Fourth point, be sufficiently capitalized. Decide what kind of capital is important to cover for all your income expectations. And then last and most important, whether you are psychologically ready to take this plunge. If you give due consideration to these 5 points, and if you think you have them covered, you are satisfied with all the decision points, then all the best and good luck for your trading journey.